Big day. Ed and Barbara, thanks for joining us. Barbara, your take on the inflation print, the Fed, and the markets.
Well, the inflation print, I think, surprised everybody and disappointed us. I mean, we were hoping January, February had some seasonal or anomalous explanation. This just says, the inflation, we've had a great decline from 8% in 22 to through this 3.5% print in the headline CPI, and it looks like it's stalled out for now. I think, all day long, you're looking at the numbers and saying you can argue that inflation is still coming down. Other things are up. You've got to worry about oil prices. But basically, I don't think what it changes is the expectation of the timing and number of rate cuts, which had been in the beginning of the year probably 6 to 7 cuts, and then through the first quarter came down to 2 or 3, and the market still went up. So I think the market right now is really focusing on earnings, and we've had a little bit of downtime here because the earnings season for first quarter doesn't start until this Friday with the big banks, and I think that's going to be very important. I think the estimates on the street range about 9 to 10% in S&P 500 earnings for the year. And I think company guidance on both their sales and their margins is going to be very important to really sort of counter the uncertainty, which is going to be there for a while. Now people are going to be waiting for the PCE number, which the Fed looks at. So it's a time of added uncertainty, but I think there are buying opportunities that have happened today.
Yeah, that's the thing, Ed. I heard Josh Brown in the previous hour. He said it's a risk on, risk off, rate cut on, rate cut off market. What if that PCE, right, if it comes in a little cooler, does that then change the inflation narrative? Or as that narrative, the last couple of months, has that narrative been reset?
I'm glad you asked, because that's kind of where I was about to go, thinking that the personal consumption expenditure deflator, which is the consumer price inflation rate that gets more weight in terms of monetary policy making, may very well be more like 0.3 rather than 0.4. I know we're talking about minute little changes here, but as Barbara said, we did have a disappointment in March following disappointments in January and February. The PCED inflation rate gives a little less weight to hospital inflation, which got somewhat hot in March. The other thing that's really weird in the CPI is the health insurance component, and it rose very sharply after declining very sharply. It's a very volatile series, and it has no relationship whatsoever to the health insurance number in the CPI. The other thing I would point out is that there's really a lot of this inflation problem in the so-called super core services CPI area is in fact auto related. We're seeing that auto insurance is continuing to go up very quickly, and that's because repairing cars has gone up a lot. This has been going on for a while. I think at some point here, they're going to cool off as we see auto prices cool off.